foreign portfolio investors seem to have regained confidence in Indian equities. After being net sellers during the first 2 months of 2023, they have cumulatively invested over 30,000 crore rupees in Indian stocks in little over 2 months. With the US Federal Reserve likely approaching the end of its rate hike cycle, analysts see FPI flows veering towards emerging markets. Within them, India could be the preferred pick. This is because against a likely slowdown in the global economic growth, India is likely to grow at 6.5 to 7% in FY 23-24.
FPIs are turning positive on INR depreciation too. In fact, it has touched 81.77 per dollar. And since the current account deficit has also been declining, it's a big positive for Indian rupee, which is making FPIs bring more inflows. Since we are near to conditional pause as indicated by Fed, the inflows in India would be linked to merits or fundamentals of equity market. Also, we are not into overvalued zone, especially the bellwether indices. Plus, the robust credit growth and the consumers' spending are also making a good case for Indian equity to perform in medium to long term. We are likely to see this trend even in future, except small disruptions, if any, by any extreme global crisis.
That apart, India's weightage in the MSCI index is down from its recent peak, making room for higher inflows.
We believe India is very well poised to capture this trend for a couple of reasons. Firstly, last year, somewhere in September and October, MSCI weightage of India was a high 16%, which currently has fallen to 13%, partly because of FPIs taking money out, partly because of the currency of India depreciating. And we think now both are set to change because we think that the Indian rupee would firm up to as much as 80 rupees because the crude prices as well as the commodity prices are a lot more weaker and the earnings are a lot more resilient. This should lead to more flows coming into India.
So, if FPIs are set to increase their stake in Indian equities, which pockets could be on their radar?
We believe the key overweight sectors where FPI would be looking at are largely two. Firstly, the banking sector. Why banking sector? Because we've seen a very strong loan book growth of as much as 15% in the last 12 months. And the banks are also improving their yield. The second sector where we believe there will be a lot of inflows coming in would be the capital goods sector. A couple of reasons here. Firstly, the Indian government in their budget has increased the capex spend for the country. Both PSU and the government spend should be as much as 4.9% of GDP. And secondly, we are also seeing some private companies giving capex, which is leading to very strong order book for the capital goods sector.
An elongated pause by the US Fed along with reasonable valuations and better earnings growth visibility will keep FPIs bullish on India. However, countries like China, Thailand, Indonesia and Hong Kong would also be on the FPI's radar. On Friday, Q4 results and global cues will guide investors.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.